The next speaker we're going to have is the manager of Bloomberg New Energy Finance. Bloomberg New Energy Finance has been a leading agency for exactly to trying to predict how the development within the energy sector, and not at least within the renewable sector. So it will be very interesting to hear that what the Global Solar Insight Service leader Jenny Chase is going to say about this topic today. But before she starts, Jenny Chase, she's participating at a webinar hosted by the ONS in collaboration with the Norwegian Solar Energy Cluster this afternoon. So that will be at 4 p.m. Central European Time today. You could still sign up for this seminar and join it later today. And the reason why I'm saying this is that Jenny is not with us right at the moment. This is a recording, but she will be live later today. So you have the opportunity later today to ask her questions. So please use that. But now we are going to listen to hear what Jenny is going to say. And the topic of her presentation is market outlook for solar energy, is it unaffected by the COVID-19 crisis? So please, Jenny.
Good afternoon, everyone. I'm Jenny Chase, Head of Solar Analysis at BloombergNEF, and I'm going to present a few of the findings from our latest market outlook for solar energy, which was published in late December 2020. I rather optimistically took the title Unaffected by COVID-19 with a question mark, and that's probably a little bit disrespectful to India. The Indian solar market has been quite badly affected by COVID-19, and I will come back to that. However, so this chart is our short-term forecast for installation worldwide, and we have a conservative and an optimistic scenario for 2020, 2021 and 2022. And we now think that 2020 will be at least as strong a year for photovoltaic installations as 2019, and probably quite a lot stronger. The reason for this is good growth in a lot of markets, particularly China, Brazil, Vietnam, the US, and Europe has also outperformed where we thought it could be at the beginning of the year. I did mention India, and the Indian solar market this year has shrunk a lot. Two things are behind that. First of all, COVID-19 disrupted worker activity and people moving around to do work and supply and finance and the financial stability of the discoms in India, and made it more difficult. But perhaps more importantly, the Indian government extended the commissioning deadline for solar projects into 2021, which means that a lot of projects that were going to be built in India in 2020 will now be built early next year. So that's not too much to worry about. But of course, the developing world has been worse affected economically by the pandemic, particularly in terms of solar new build, than Europe and North America, and I want to be a little bit sensitive to that. A couple of other things about this chart. We've got more confidence now about 2021 and 2022 being strong years for new solar builds. Many countries, especially in China and Europe, have translated their net zero targets into solar auctions and plans to roll out solar auctions. And I think that's partly because solar is one of the easiest parts of a net zero target to actually do, and one of the least regrets. So they're coming forward with quite sturdy plans to build solar for the next few years. And for that reason, for the first time, we have a 200 gigawatt per year photovoltaic market in 2022, potentially, in the optimistic scenario. It could be less than that, but I would say that we usually end up more in the optimistic than the conservative scenario here. And previously, we thought that that this would happen in the 2030s. Now, one of the factors working at the end of 2020 that makes us pretty sure that it's been a very strong year despite a quite slow start, is that the prices for key materials have risen sharply. Around July, the price of polysilicon rose significantly, partly due to a couple of factories in China going offline. There was a flood and a fire which reduced supply, but also because demand really picked up in the fourth quarter. So rose sharply because of Chinese build, not just of solar, but of other sectors. And in fact, the glass price rose quite sharply as well and that is largely because of solar build, because what's driving the increase in glass price is an increase in the capacity to roll the glass into sheets of the right size and then temper it. The new design of solar modules use big wafers, and so they're bigger modules with 2mm thin tempered glass. And that's a design that apparently is not enough capacity for, but we do expect that to ease in 2021. These factors mean that at one point this year, we expected the average module price to be somewhere between 17 and 18 US cents per watt. And it's actually about 20 US cents per watt at the end of 2020 for monocrystalline silicon modules. And mainly the reason that price is high is because of changes in the raw material price. So I mentioned one slide up that we have never previously anticipated a 200 gigawatt per year market until the 2030s. In October, we completed a long-term modelling exercise which had solar and wind making up 56% of the world's power generation mix in 2050. And solar would be about 23% of the world's power mix. The trouble is that assumed that solar only exceeded 200 gigawatts a year in the 2030s. Now this is we call it our economic transition scenario. It builds solar when it's economic to do so. It doesn't take into account policy that was not announced at the time we published the report. And so my only conclusion from this is that solar is well ahead of an economic transition scenario for new builds. And we are going even faster than we thought we would be. So this is quite common for solar. Solar build keeps running ahead of forecasts. And part of the interesting times that we're in is that solar is the cheapest source of bulk electricity in many countries. Along with wind, solar and wind are now the cheapest source of electricity available to about 2/3 of the world's population, representing about 72% of GDP and about 85% of the world's power demand, which is quite amazing. The other thing, though, as a solar analyst rather than a forecaster, I would say is it's a really hard business to make money in. When the raw materials prices rose this year, a lot of the module makers were really squeezed, and it essentially came out of their margins a lot of the time, even though some of them managed to put prices up. It's highly competitive, costs are falling, and the manufacturers are going bankrupt all the time. So yeah, I hope this was helpful in introducing the panel. Thank you.
And thank you so much, Jenny Chase. And remember then, you can listen to her later today at the webinar starting at 4 o'clock Central European time.